Welcome to Trades of the Week with myself and no other than Keith Sullivan. And he did a solo act last week, so do make sure you check that out if you haven't. It was awesome. How did it feel to be alone, Keith?
Yeah, it felt good, but it's really good to have you back next to me there, Dennis.
I'm not sure about that, but thank you. I'll take it. So today's going to be very, very exciting because we're going to talk about a few things that are happening. We got some announcements last Friday, that made the market drop 4.6%. The question is, though, is this an opportunity or is it just one of the stepping stones for further downside in the market? Today, you will find out. September is also going to be an amazing month, not only hopefully for cryptos, but for other assets as well, because we do have two major hard forks upgrades coming out. And in today's Trades of the Week, you'll find out everything. And before we get started, there is one thing I do want to mention, and that is this. The 4th of September, it's coming up. We will have a one-day event, a Stock Market Masterclass with Marcus DeMaria. And for those of you who don't know him, he has been trading and investing for 20 years, and he will be delivering this live to you firsthand for free. You will learn about the stock market, and not only that, but also how to simplify the strategies so you can get started right away. So do make sure you sign up. It's the 4th of September, a whole day with Marcus DeMaria. So sign up today with the link below, or maybe it's floating around here somewhere. And with that being said, let's dive into it. We have a lot to cover today. All right, so we are looking at ACI. That's the first one. We're around break even on this one, so do your own research. And if you would like to get in on this, you absolutely can. We were so close to getting stopped out, but we weren't. And Keith, I know you're usually getting emotions involved, but no emotions. That's very important. PAYX, we had Paychecks Inc. We entered this, we were up almost 3%, and we raised the stop loss to 2%, and then boom, went down and took us out, and there we made a 2% profit. Let me hear that moo, Keith.
Moo!
Very good. That is awesome. And let's go over to Coty. That was not so much a moo, but rather a boo. We had a 1% loss on that one, just went up, took us out, and then came down again. And then we have Merck as well. Merck got stopped out of break even. We were up 1%, came down, took us out of break even. That's how it goes. ABMD, we have the stop loss at break even. So we are looking for that, right? We're looking for the market to now be going down, went up a little bit and then down again. So now we have the stop loss just above that kind of lower high. And now we're waiting for the market to come lower there as well. So very, very exciting. And both of BHF and on Cake and on our LRN, we're slightly in profit, but not enough to do anything with the stop loss. And before we get into the new stock for today, Keith, what has happened in the market? Why did we see a fall of 4.46 or so% last week?
Yeah, that is a great point, Dennis. And a lot of people gone, what actually happened in the market to see that drop? And the main thing was it was the PCE announcement. Now, if you don't know what the PCE is, it is the leading indicator for the Federal Reserve when it comes to dictating or distinguishing what inflation is. Now, PCE actually was a bit more positive in regards to its news. So analysts believe it was going to increase by 0.3%, but actually increased only by 0.1%, showing a deceleration of inflation. Now, obviously, we saw that last week, 2 weeks ago, or no, it was last week with CPI. We also saw a deceleration in regards to CPI, which is the overall inflation in the US. Now, as we said, the main reason that we are seeing a deceleration in inflation is because energy and oil prices are beginning to decrease in the US. Now, it's positive news. Everyone's like, yeah, okay, deceleration. But what actually caused the market to drop? And this is where Jerome Powell, the man himself, comes into play and goes, yeah, we have started to see a deceleration, but the Federal Reserve Committee, which is whoever dictates what inflation interest rate hikes are going to be, need to see real strong evidence of a decrease in inflation. And right now, we're just not there. And that bit of announcement that came out really struck fear back into the market. And it basically shows the Federal Reserve's stance on increasing interest rates. So increase in rate hikes at 0.75 to 1%. Okay. Now that fear caused the market to drop. We did see an increase in dollar strength because money was moved out of equities and back into dollars. So we saw an increase in dollar strength and a decrease in the equity market. Now, are we saying this is the next leg down on the bear run? We don't know just yet. We are still waiting for the market to give us structural evidence, but it potentially could be a bit more of a retracement, a bit more of a pullback, as there is fear coming back into the market. Now, what are people doing? This is the number one question. You're going, Keith, this is amazing news, but what do I do with this? I am an investor. I'm sitting here at my laptop. What do I do with this? And big investors are currently looking at high dividends yield stocks. So companies which are paying high dividends yields out to their investors, because why? By holding the companies, you are actually getting paid more. You're getting interest added just for holding on to the company, which is a great way, because if you're implementing VCA, now, if you don't know about VCA, it's basically buying as that market drops. If you're buying into big blue chip companies, strongest companies possible, so you know your money is safe, you know there'll be a recovery at some point, and you're being paid dividends just for holding, it's a no-brainer. And that's what a lot of investors are now going over to, is they're going, right, we need to generate some sort of money. Dividends is probably the way to go at this moment in time. We're getting into the bigger companies, and we are knowing that these companies, our money is safe. So that is what we're beginning to start to see. And I believe it was in pension funds are actually down 3 trillion. And that's just because the market's down. Everyone's run thing going, it's down 3 trillion. My pension is going to zero. That is not the case. All pensions really are doing is buying and holding. They're buying into the bigger, stronger companies, and they're just holding, they're waiting, but they're not really looking at the dividend side. So this is what we need to do as active investors to go, how can I generate money as the market is low? And dividends is probably the way to go. Now, Dennis, I know you've got something around target a bit later on with dividends, but is there anything else that you want to add?
No, I just to reiterate what you said there, that it's so important, right? That most people don't have a strategy. They panic sell when the market is going down, and you can actually find opportunities in this. Because if you have really strong companies down 40, 50% at a discount that pays you good yield, that is great, because then not only you're going to get more shares, and when the price goes up, you make even more. You also get paid dividend by the company, which is great. But for the week ahead, we can take a quick look at the Fear and Greed Index. The market is at neutral. So people are a little bit undecided. Will the market go higher? Will the market go lower? But we do have a situation here. If we just take a quick look at the NASDAQ, the US 100, we're currently trading within this region down here. We have this region here, and now this region up here. So now we will really be oscillating, maybe who knows for how long, but oscillating between these two levels. So in order for us to determine which will be the major move in one of the directions, we need to see a break of either this to the downside or maybe a break to the upside. So those are the two things we're waiting for. And as always, we do need to be hedged. We have quite a few shorts that we put on last week. So therefore, we're adding one long this week, a nice looking buffalo with higher highs and higher lows, right? Going higher and higher, which is great. So so that is really, really awesome, I believe. So that's pretty much it for stocks for now. And then if we jump over to cryptos, let's have a look at Bitcoin, shall we? Because cryptos has also been affected based on the news on Friday, where the markets went down, and also on Thursday, then the cryptos did go down as well. So we're waiting for the next move here as well. And the question is, of course, we might have a target which we believed before at 30,000. But it failed to break that high, and instead it broke to the downside. So maybe we will have some kind of replay of this move here, which would mean we're getting there's pretty much two camps. That's one of the camps. The other camp is, are we now creating a double bottom, and now we'll move up from there? Those are the two things. So the double bottom is a bullish pattern, but we might have a consolidation where we will see a move lower. So those are the two different parts that we're seeing at the moment. All right. So with that being said, there are some other news that I think are very exciting to see, because even though over time now the price has been really going down, one thing that's worth mentioning is that Bitcoin wallets, the number of open wallet addresses, is at an all-time high. They're almost surpassing 1 billion, that's billion with a B, wallet addresses for Bitcoin or active people in Bitcoin, which is great, or in cryptos overall. So that is really, really good news, I would say. So what that means is, even though the price is going down, the number of users are going up. And the consequence of that should be that price is going up over time. In September now, that could trigger a new rally in the market. We have two major coins that's going to come up with news. Ethereum has actually gone up quite a bit over the last couple of weeks. Like from the lows, it's actually up roughly 100%, or was, it's up 83%, because they do have a big merge coming up now in September, where they go from their kind of 0.1 to 0.2 system, which means that they are going to be more efficient, more scalable, and better and cheaper for companies to use. And Ethereum is the biggest blockchain that is used out there. The second one is Cardano. Cardano is currently down at a support level, so do your research on this. It's down 84% from the high that we measured out a long time ago. The market's really been going down. But they are also coming up with their hard fork, an upgrade that's going to make their blockchain a lot better as well, with Charles Hoskinson leading this. And that's also going to happen in September. So if both of those are successful, it might give cryptos a big push in the right direction. And the last thing I would like to say to you is Bitcoin really, is that an exempt from inflation? Because I just want to make sure I remind you of this. And by the way, if you're investing into cryptos, comment below. We would love to hear from you if you're participating in this digital revolution that is happening. Because one thing I want to mention is, look at this. If you bought $1, if you put $1 into Bitcoin or cryptos, it's you would have gotten 4,000 satoshis. Like, every Bitcoin can be divided into smaller parts. One part of these 100 millions of these parts is one satoshi. 9 years ago, you would have gotten 4,000 satoshis if you bought for $1. Now, now that is now. If you buy for $1 now, you will get 4,000 satoshis. But 9 years ago, you would have gotten 10 million satoshis. So what does this mean? Well, this means that Bitcoin might be a remedy for inflation, because over time, Bitcoin has really increased in value, gone from a few cents to over 67,000, now at 20,000. So not now, it's down a little bit, but over time, it looks to be a really good hedge against inflation, which is why we keep cryptos in our portfolios, of course, as well. So the question is, of course, are you? What actions are you taking? Are you diversifying into cryptos? Please comment below. We would love to hear from you. But the same with the cryptos, just to summarize the crypto part here. Just to summarize that, what we'll be able to see is that this is also just hovering, yes, much like the stock market, between 25,000 and 19,000 roughly. So we're waiting for a break in either directions basically here. So we're gonna wait and see. So Keith, anything to add on cryptos before we jump into the very exciting topics of investing into stocks?
Yeah, so what you said was 100% correct there, Dennis. In regards to inflation, are we seeing Bitcoin being that, that deflationary hedge? And for me personally, when something has a limited supply, which Bitcoin does, and the fact that they're burning, or the halving's happening, that is causing less Bitcoins to be around, which then means we are seeing a deflationary aspect. Now, the only thing that I've seen currently within the crypto market and the stock market is there's been some correlation. Now, when there's been big bits of news or big moves in the market, we are seeing both markets having the same reaction. So having a negative reaction when CPI came out and PCE come out, and that's just because money is being moved from one of the equities or from the cryptocurrencies and then back into the dollar. So then we'll start seeing changes in the dollar index. So there is that bit of correlation, but longer term, you're going to see a detachment from that correlation, where you're going to start seeing what is the hedge against inflation? And the likes of Bitcoin, when Ethereum 2.0 comes out and they're limiting the amount of Ethereum tokens out about, these are the deflationary aspects that we are looking for in some of these projects. So I think look at that when it comes to the longer term investment and then getting into the stronger projects as possible. But other than that, Dennis, I think crypto right now, we have seen a retracement. We've seen a bit of a cooling off. Now we're just waiting to see, okay, where is sentiment going to take us? Is it going to break below the 20,000 with Bitcoin, which then will draw the market a bit lower? Or will it break above the 22,000, which draws the market a bit higher? Now, we don't need to run on FOMO or fear or anything like that, because we've got the strategies to tell us what happens. Yeah. Okay, if it breaks lower, the strategy tells us what we need to do. If it breaks higher, that is our move-in season, and the strategy will tell us where we need to start taking profits. So this is the time not to get emotional. This is noise. Okay, these type of movements in the market is just noise. Look at the longer term picture. What has Bitcoin done longer term? Bitcoin went up. It fell 83%, then rallied over 3,000% in the bear market of 2018. So the movements short term is just noise. Do not play into the hands of that. Okay, follow the strategy. Make sure you invest into the strongest projects. Invest as that market goes down, but also make sure you take profits when the market goes up. But Dennis, other than that, I think that's pretty much it for me on crypto.
No, yeah, that's perfect, right? And we might sound like a tape, right? Like yesterday, just noise, longer term, and then we buy, sell a little bit, but that's how easy and simple it should be, right? Trading and investing should be like watching paint dry. That's how boring to some extent it should be, because you're here to make money. We're here to make money. So make sure we follow the rules to a T, and then the money will come over time. So we usually say this is not like get rich quick, but it is get rich for sure. That's what we like to do. So if we just jump quickly into the VCAs as well, what we know is that CMG, Chipotle, we've been eating a lot of Mexican grill, plus 20%. So the stop loss is still there, waiting for the next move in that, like watching paint dry. We're just watching this and waiting for it to dry. And then we have Apple as well. And with Apple, we were plus 20%. So yesterday, actually, or 2 days ago, this should have stopped us out as well, which is awesome news. And I think we took profit on this. Did we take profit on this last week, Keith?
I believe the stop loss got triggered on Friday's move down.
Yeah, on Friday's move down, exactly. So that means we made 20% on Apple as well, which is great news. So we didn't need to do anything. We just rose the stop loss. And then, of course, the stop loss took the price down, which was great news. So 20% on Apple, Keith, that's worth a good move.
Moo!
Well done, well done. That is awesome. So with that being said, we don't really have anything more to do. We just look over your positions. It's just some of them are kind of a few percent in profit, like low is one of them, plus 7%, which is great. And the one we're adding for this week is TGT or Target. Down 37% is a great discount. And I mean, from the all-time high, it's down even more, like 40%. And the reason this is interesting is because they have a quite generous also dividend. So I think it's a roughly around 4% or so, which is quite good for stocks, right? It's not better than inflation, but imagine if this now goes up 30-40% as well, and then you're getting 4% on that. That's what makes it interesting. So you could have a look at that. We're not investing into companies just because of the dividend. We're investing into companies with the VCA strategy, and if they pay dividend, great. So now we have a chance to get into good quality companies very cheap. Target is one of those. So with that being said, I think that's pretty much it. Look over your positions, raise the stop loss if needed, and then we'll see where the market will take us. And with that being said, everyone, that was it for trades of the week, really. The results for this week, we have 1% on Buffalo, so that takes us up to 65%. And Keith, you know what? It's August 2022. It's 2 years ago since we started to track this on here. And 65% on Buffalo is roughly 32% a year, which is not too bad, actually. And that is non-compounded. Compounded, this would be more, because if you make 1%, then you put that on top, and then another, and then another. So you're always going to be working with more money if it goes in the right direction. VCA up 1,096% with the profits on Apple. And with cryptos, we are currently down on our positions, but we're waiting for the time, Keith, emotionless, for the time to come for when we can take profits, of course. And with that being said, everyone, thank you so much for watching Trades of the Week. And don't forget to sign up for the one-day event with Marcus and Maria, full day on the 4th of September. So do make sure you sign up now, because you're going to be learning everything you need to get started with not with cryptocurrencies, but with stocks, and learn to the strategies as well that we use to get these results. So to an introduction. So do make sure you sign up for that. And with that being said, we do hope you enjoyed this Trades of the Week this week, and we cannot wait to see you next week. And in order for you to attend next week, press that subscribe button, like button if you like the video, comment below as well, and let us know if you would like to see anything different. And also the alarm bell, so you make sure you get notifications for when we are releasing the new video. So from myself, Keith, and the whole team, have an amazing week, and we look forward to seeing you on the next Trades of the Week.